Good day, people. Welcome back to my YouTube channel, Elliott Wave Principal. I'm your host, Shaheen, and we are yet at it again. That is gold and silver analysis. Um, in my previous video, where I had a forecast that we are expecting the larger correction for gold and silver, and I just wanted to reiterate the same point over here with adding a couple of more things, so that more and more people can pay attention to. There's a huge, if almost every trader who or every trader or investor is bullish on gold and silver right now, apart from few select who have access to the actual research that's pushing the value of gold and silver to record highs. Now, like everything, any stocks or any options or any commodities, prices do not always move vertically. It seems highly likely that we have completed the top in gold and silver both, and they're about to give us a sizable correction. The reason this correction is so crucial is because this is going to be probably the last chance where an average Joe can get into the investment of gold and silver and can make 5x in gold, probably not 5x, I would say anywhere from 3x to 4x in gold, and maybe somewhere around 10x in silver. So huge investment opportunity is coming, but it's also an awareness of the risks that people are in right now. If you are buying on right now in gold and silver, and especially buying with borrowed money, or you're taking a lot of risk on it, you are using money that's not yours, and you're trying to make quick buck, then it's a bad time. We are definitely going to see a sizable correction. You can call it a crash, you can call it a correction, but it would dent a lot of people. It would put a lot of people on the negative side. So there's no denial that we are to expect a severe bearish correction in gold and silver, and the shape of it is the most difficult pattern to forecast. Elliott was very simple when he gave us a zigzag or double zigzag correction or a flat correction. The problem is you cannot forecast that shape either. And WD Gann, who was almost the same time, and made a separate terminology for correction, and he called them relatively true trend lines. So he would draw the price path off for the forecast, and he would call them relatively true trend line. That it is probably is going to happen. He knew that the important points about the forecast, but whether the forecast was exactly going to follow the path, he wasn't sure about it. That's why he used the term relatively true trend line. In today's analysis, all I'm telling you is that I am bearish on gold and silver. There is no denying. I've already explained to it, but there could be many price path that prices can take. It can definitely crash all the way to the price target area, which is right now 2770, but it can go to become lower as well. I'm not 100% sure that whether we are going to absolutely find the bottom over here. So it can mail over here. However, we'll have to steer through the data to find the exact bottom. So it is definitely bearish. The next important point is that it, first of all, it can crash further, and then it can make a sizable jump and then come back again to complete the pattern. This is one possibility. The second possibility is that it can go again, once again, create a new high and can come back too. This is once again is asking for too much of a price uh, volatility in a very short period of time, and I think this is going to be less likely to happen. But the point is, we are still in the larger, if you look at the very large time pattern, for example, 60, 80 years time pattern, we are in the bullish market. There's no denial in it. And we're still in the bullish market. We are asking for a sizable correction that, in WD Gann's word, put that will technically correct the market. That was the so whenever you see a sizable correction, that's if you see 25% or 30%, 37.5%, that's a sizable correction. And it's a healthy correction. Anything beyond 50% is kind of putting you into the bad territory. But up to a max of 50% is a sizable correction, and it's good, it's healthy. And I think we are going to see a healthy correction in stock market, I mean in gold and silver. So I think this is gonna be less hell probable. this is one probability. The second probability is that the price actually may not jump all the way down on the first bounce, right? It can actually make a small, something like this, and then it can jump all the way from the midpoint to form a correction, and then on the second leg it can come down. Definitely, this is one of the possibilities that we can actually look at it. So it can create a double zigzag pattern like this as well. So there's a possibility once again. That's why I'm saying that, because if you look at the stock chart of Newmont, and I'll show you in a bit. Actually, let me see. I'll have to move the silver chart. So I'll show you once I'm done with the gold chart, I'll bring the Newmont chart and I'll show you one rare occurrence that's uh, that's a rare event, but that does happen. It does happen. So could there be a possibility that we can bring the prices of sol gold all the way to down in the first leg? There's a highly likelihood of it, and we can see some of it coming from the last week. If you look at the last week, we were definitely gold dropped almost 6%, and that's saying it's the largest drop that gold market has seen in a single day in last 12 years or so. This is the drop that we are witnessing about. And given amount the time that we have already seen, which is already 3 days after that, nothing has happened apart from the prices have stayed in the correction. And if you want to look at the correction, I can definitely look at it and give you an indication. I think on TradingView made a forecast that prices are to stay in the side range, and they did absolutely that. So I'm considering this whole wave structure is smaller. Let me zoom in a bit. So on my charts, this is what I'm doing. Let's go on 15-minute chart and go back. And if you want to see the my logic, and I think that we have completed an A, B, and C, marking it as a W, and then A, B, and C, marking it as an X. I was expecting for the prices to come down, but they made a return from over here. And then this is, I guess, the last leg, which is of a W of double three structure. Could this continue like this as well? For example, prices can come do this, they can do it, but I would not be risking it to make a buy over here at this point. Okay, so let my make point clear here. So there's a possibility that we can actually see a structure like this, but I will not risk the buy at the last leg. And the reason is it could not probably happen too. We can simply go all the way down as well. So this is a very risky trade. I'm bearish right now from this point, because this is the top of the sideways structure as well. So it's very easy to go on the bearish structure. So I'm bearish right now on gold and silver, but we can definitely call the start of the structure. This is our W, and this hole is our X, and this hole I believe is our Y right over here. Or it can once again it can come over and complete Y as well. But again, once again, it's not worth risking, because once price is going to start moving in the bearish territory, that is bearish impulse wave, then we know what it can do in a shorter period of time from the last wave over here. All right, so we can clearly see from the top actually. Let's see how much in terms of percentage. So 6.84% dropped from the top in a single move. That's what gold can do, or that's what then stocks can do once they are in the under the immense impulsive structure in on the bearish side as well. So once again, I wanted to point out the larger forecast and the shorter forecast as well. And let's see if I can bring the Newmont charts to show you what I'm talking about and what is the possibility. I think it's Newmont because in US, because we don't have mention in Canada anymore now, and they took it off for some reason. I would love to trade Newmont, but they have taken it off from TSX. That's Toronto Stock Exchange. All right, let's go back and see if I can generate the weekly time frame analysis. So as you guys can see that the drop in Newmont is significant as well in for 1 week, right? I wanted to point out a couple things actually. Since second thing, I'll show you the historic drop that I'm talking about. But look at um, just by looking at the chart, compare the chart to the first leg right over here and the second leg right over here. This price has not gone beyond strongly beyond this point, and as soon as price got into there, it got pushed down severely. All right, could the price of Newmont be back down over here sharply, like in a straight line? If it does, that would be a golden opportunity to once again go long in Newmont. I had my shares in Newmont, but I sold them a little precursor to the top actually. I was not exactly be able to point the top, but I'm happy right now that I think I sold on the smaller range right over here, on the top of the range right over here, somewhere around $85, and right now price is actually trading below that point. So I'm happy. um, and once again, there is a possibility that Newmont can definitely pull back down all the way down over here. Okay, and I'll show you the historic chart where I wanted to point out the dangers of uh, smaller move in a, I mean larger move in a very small period of time. If we can get to monthly time frame, all right, there it is. So how many weeks it took to drop it? 1 month, one single bar. That's what it took for the price of Newmont to drop from $80 all the way to over here. And this whole bullish run that Newmont had, and I've seen this bullish run in in one more stock at least. And during this size, gold was simply moving uh, to the top of the previous structure. So gold did something like this, right? And Newmont went absolutely crazy, and then it was more crazy on the bearish side. That's what it did. Within a single month, it dropped from the top of right over here to crashing 76% of its price value. Okay, it did recover and some of it, and then came back again. So be really careful if you're trading with the gold and silver right now. Here's the forecast that I have for silver. Once again, it can go in one of the two ways. We have initial drop followed by a sizable correction and a last drop. But once again, we can actually see this drop right over here. Prices can drop all the way to the target area, go up and come down as well, or it can actually form a dead cat bounce as well. All right, so it can actually form dead cat bounce as well right over here, keeping the pricing tight in a very small range as well. In that case, the structure becomes completely different. But one thing is very sure, and that the bearish market in gold and silver is on us, whether you like it or not like it. And the whole reason I'm sharing, because people can get ready. They can buy this pullback in silver and in gold and can make a lot of money in the coming bullish market. So get ready. Maybe it could happen in 3 months. Maybe it could happen in 6 months. Um, who knows? All right. So I wanted to show you the cup and handle pattern that I'm expecting that we are going to have in silver. This is the larger cup that we have right over here. A lot of people were talking about it, but then again, I wanted to show you, but it did not turn into the handle pattern. Prices went all the way down over here. However, on the second one right over here, we are expecting and that the price is going to create a cup and handle pattern. The whole point of this top is very important because we will be crossing the prehistoric, I mean, the historic top of 1980 as well. And this is the significant top. Gold has already crossed it, silver hasn't crossed it yet. So, and the point of showing you, if you can say, okay, larger cup followed by a smaller cup and then a handle, then yeah, I haven't seen a double cup and a handle pattern like this. But we are definitely talking about once the price comes back, there is a possibility a lot of people will go in over here, and then we can only see the first leg as well. This is also a possibility that as soon as the first leg comes down, people will make a lot of buy, and then prices can shoot up again in a small period of time as well. So, but be really careful. Wish you good luck with your trading. Have a good one and bye bye.